New home sales rising in December. That's the first time we've seen an uptick since July. And for more on this, we want to bring in Brad Dillman. He's the chief economist at Cortland. And Brad, we talk about the fact that housing market has been very, very resilient. Looking at new home sales, capping its best year since 2006. What's supporting the housing market? Is it all about the low rates?
That's clearly part of it. There's no doubt about it. We have to remember when we look at the 10-year Treasury rate, it's negative right now in real terms. And that, of course, has given us these uncharacteristically low mortgage rates, which in turn are leading to this uncharacteristically high home price appreciation. If we look at the Case-Shiller index, it's the national index is sporting 9.5% year-over-year growth right now in home price appreciation. So that's definitely some umph there. The second part, it's not only just mortgage rates, it's also the undersupply. We have to remember this country has been underbuilt when it comes to housing for over 5 years now. A lot of this goes back to the Great Recession and some of the policy actions that were taken during that time frame, which led to a few distortions in the housing market. So in some sense, we're kind of making up for the past.
So, but how is this not a distortion? I mean, housing is cyclical, is it not? And if we have low interest rates, which eventually will go up, and accelerated prices, which will eventually come down, how are the people buying today going to sell for more in the future?
Well, it's a matter of time, of course. What we are going to see, or what we think, is a rising 10-year Treasury rate. Admittedly, it has not gone up as much as some people might expect, given a unified government, even if it is just a narrow margin right now for the Democrats. But we would expect higher rates. At the same time, we are going to expect more supply. So when Jerome Powell was speaking yesterday, he was talking about these high home prices, the high home price growth, and basically that unlike 2012, the last time we saw a long period of negative real 10-year Treasury rates, this time we're starting to see that this home price appreciation is bringing forth supply. So it's always difficult to look at a broad index and to say what's the fate of an individual at a specific segment or a specific part of the market. But to suffice it to say, we certainly are undersupplied. We're expecting relatively low mortgage rates that are going to be up a little bit higher, but we don't think that's going to be something that's going to compromise the overall market at this time. And if one were concerned about that, they could look forward to these propositions of a first-time home buyer credit. So in the event that we did have meaningfully higher mortgage rates or more supply that really began to compound in such a way that it was deleterious to the market, you do still have the potential for fiscal policy actions, namely a first-time home buyer credit to support the housing market as well. When I say undersupply,
Brad, just talking about that imbalance, though, when it comes to supply and demand, a lot of this, yes, we have too much demand out there, not enough supply. But when do you expect that to be corrected? Because that's such an important part of this story.
Yeah, in aggregate, nationally, we would think 5 years. The most part of the deficit is, in fact, on the single-family side. We've had continued population growth over the last 10 years. Admittedly, it has slowed in recent years on the immigration side, which from the standpoint of the housing deficit is actually a good thing. You've got an undersupply of housing to the tune of 1.2 million units or more. Smaller population growth is in fact a good thing. Something that's better, of course, is just adding more supply, which is precisely what we're seeing. So we're seeing these high home price growth that is bringing forth new supply, and that at the end of the day is going to lead to this homeostatic equilibrium, that self-correcting process in economics. It's just going to take several years, it looks like, based on our current forecast.
All right, Brad Dillman, Cortland's chief economist. Thanks so much for taking the time to talk to us.
You bet.